more and more lenders are moving more and more of those steps to be more and more digitized. And it's kind of happening gradually. But I'm sort of reminded of that, and I'm going to paraphrase it badly, but that Bill Gates thing around things don't seem to change much in the short term, but in the long term, they change a lot. Hey, I'm Vincent Turner, and you're listening to Property Investory.
Fantastic. Well, Vincent, thank you so much for coming on to Property Investory podcast today. Very, very excited to have your story and so forth. Firstly, just start off with maybe sharing with the audience what your full title is, what you do in your business, and feel free to brag about it.
Sure, okay. Not brag about it. That's very un-Australian. No, I'm the founder of Uno, and that's my fourth tech company, if you like. So I've been a entrepreneur. I'm not loving that word, but a tech founder for 20 years, over 4 different businesses.
Wow.
I currently focus kind of in the innovation part of what we do. So my official title, I think if you went to my LinkedIn, which says founder and director. And what my role is predominantly, is working on these key things that are kind of, I hate the word special projects, but it's kind of those levers, the things that sort of have to be done. They don't really fit in someone's role. And if someone does them, they can be a real game changer for the business. Like some of the tech we launched last year.
Yeah, totally. So you mentioned you've been a founder of 4 tech companies. Now, tell us a little bit about these previous ones before Uno Loans. I'd be curious just to know, for the audience, what you've done actually.
Well, I mean, it sort of happened by accident, which I think is how a good chunk of my life has happened, I guess. I was at university in Perth, where I'm from, and I was studying finance, and it was in like 99, big tech boom, like the first tech boom. And I walked into the wrong lecture theatre. And there was some guys giving a talk on, hey, when you finish your commerce degree, come and join us and become an advisor, like a financial advisory firm. And I went, cool, I've got a startup idea. Can I come and pitch you my idea? And the guy's like, sure. And so I went to lunch about 2 weeks later, and I pitched these guys my idea. I had developed some messaging technology, and me and a friend had got a patent on that technology, and we'd sold it to a few real estate agents. And about 4 weeks later, they ended up we pitched them and some of their investors, and they ended up just writing us checks on the spot.
Wow.
So I left university to go and pursue this business idea. And then the investors ended up putting another $1 million in. It's like I'm 21 at this point. And they're like, you need to leave university and go to Sydney. I'm like, all right, fine, sure. And so that was business number 1. And then we found ourselves in 2001 when the tech bubble burst. We had money, we had customers, we had revenue. We were going well, I guess. But the market became terrible. So we're like, what else can we do given we have all these things? And we pivoted, if you like, that word didn't really exist then, but we pivoted to mortgage software because all of our customers were banks. So we had an opportunity to build mortgage software for one of the banks, and then ultimately all of them. And that sort of became the second business, if you like. So it was the same business, but it was a totally different shift to what we were doing. We ended up having about 90% of the banks on that platform. We're processing about 50 billion a year in mortgages through that platform. So it was pretty significant at the time. And then I ended up getting sick of that. And so I decided to leave that business altogether. In fact, I walked away from it. I got nothing out of it in the end because we had so much investment and all these other things. And I was young and didn't negotiate very well, I guess. But ended up learning a lot and executing a lot and getting a reputation in mortgages and finance. And then went to San Francisco originally to do industrial design and then decided, no, I don't want to do that. I've got an opportunity to do financial technology, like fintech was becoming a word. And so I started a company called PlanWise, which was focused on helping people make better financial decisions, partially motivated by a very terrible property decision I made a few years prior, which we can talk about later.
Yep.
And then that business, we did the standard startup thing in the Valley, like go and raise money and, get the press and all this kind of stuff, and did develop some really cool tech, but ultimately the business model wasn't right. And it was clear we needed to actually be in financial services. And I realized my network in Australia was much better than it was in the US, and we would need a lot of capital, which I couldn't get in the US. And so I had an opportunity to come back to Australia in 2015 and ended up getting that company and that technology and rolling that into what is now Uno, which is what I'm focused on at the moment.
Wow. I was going to say, that's very interesting that you're saying that in the US, you couldn't get the funding coming back to Australia, but US is such a large economy, like 10 times larger than us. How is it possible that you couldn't get the money for this type of technology?
The Silicon Valley is very good at funding things with a lot of capital once they're already working. There's a lot of capital over there for that. There is a lot of capital for early stage stuff where it doesn't work yet, but that stuff tends to look a certain way, right? like that you have an outsized advantage. And I'm not sour grapes on this. Like there's people who go there without any of these things and raise money and do well, but I didn't. You know, you've come out of a particular college, Stanford, you know, whatever, or you've worked at a particular company, Facebook, Google, Apple, whatever, or you've had an exit previously. And if you can sort of get through those kind of lenses, then US investors in Silicon Valley are like, great, we'll put some early stage capital into you. Or if you're technical, I'm not a coder. I'm technical, but I'm not a coder. So I didn't fit the mold there, you know, and I was able to raise money, but not from the Valley. I raised it from a bunch of different places in my own networks. And that was surprising, but I sort of get it. You know, there's a lot of people there looking for money and they just have to apply a filter, and I just didn't fit the filter, I guess.
That's amazing. Yeah, no, it's fascinating to be able to hear that. We'll definitely delve into a lot more, but I think what listeners would probably like to know, maybe share with them what your every day is like, maybe say in 60 seconds or less, what are you currently doing any given day at the moment?
Yeah, geez, wow. Okay. So a lot of the kind of knowledge of how mortgages works and what we're trying to achieve, even though I'm not in day to day, is still in my head. And a lot of what I'm doing day to day is getting that out of my head so that the people who actually deal with it day to day can design the software, drive the customer experience, execute the marketing, whatever. Because I'm a founder and like have been quite founder led, but I stepped back from the CEO role about 2 years ago. And I think a lot of my day is in meetings with people in the business who need to be doing their job, and I need to hand over to them. So that's a lot of what I'm doing. I'm also doing a lot with external stakeholders, whether it's people who might want to invest in the company, or companies we might want to partner with, or banks who we already do a lot of work with, but we're trying to do more work with. We want to do more than just send them loans. We want to actually help them with their technology. So a lot of it is, I don't know, it feels like kind of enterprise business development kind of stuff, taking a lot of calls, being on a lot of like following through a process. And then and you know, sort of my kind of the bulk of where I spend all my time. But I've invested in probably about a dozen companies, about half a dozen active at the moment. And so I'm often helping them. I probably spend about 4 to 6 hours a week helping other entrepreneurs. You know, like I enjoy it, and they reach out, and I'm pretty bad at saying no to stuff. Separately, I run a podcast as well. I interview people who I think are doing impact-led stuff because that's interesting to me, and I'm not doing enough for that myself. And then I also have a belt that I'm going to launch soon as a side project. So there's that.
Oh, that's so cool. So you're almost like, I think they term it as like an angel investor, also, funder support.
Yeah. I mean, I think I'm not a full-time angel investor. I don't have the capital to do it, to be perfectly honest. Or the headspace. I think the guys who go and make, or girls who make 20, 30 investments a year are like angel investors. I'm kind of opportunistic. If I see a company or a brand that I love that's doing really cool stuff that I think I can help because I've done startup for 20 years, then I usually just find them on Twitter and go, hey, I love your stuff. If it turns out that they're raising money at the level and stage that I can play at and be meaningful from a helping perspective, I'm usually like, hey, I love what you're doing. Can I help plus put a small amount of money in? It's never enough for them to run their business. It's, you know, it's like in the order of 10 20 grand kind of thing. But it's more to get me a seat at the table because I'm like, you guys are doing cool stuff.
Oh, it's awesome. Like, because I listened to quite a well-known podcast called How I Built This with Guy Raz. And oh man, some of the stories from like the most recent one I heard was about Ring, where that video camera, that doorbell video camera, just recently got sold to I think it was Amazon or Google. Amazon for like $1 billion, and he just started off just small. And
you know what I do think though? I mean, I've gone and lived it in San Francisco, and like I think we do have a lot of startup culture, and some aspects of it are good, but I think getting too focused on the rags to riches, when did you run out of money, and all this kind of stuff. Like, I'm so interested in what problem are you solving? Who does it impact? How are you rethinking, you know, the way the world works? Like, those stories I think are far more fascinating, like, and reach people in a different way. There's only so many times you can listen to I ran out of money and then I had this big break and now I'm worth $1 billion. Come on.
Yeah, that happens, you know, every show.
We've heard that story, you know, and like it's not, I don't know, it doesn't, like, I think a lot of people want to hear, you know, they want something that they can potentially relate to as well.
Totally, totally. And I think this is where your story relates a lot to us. That's why I wanted to share your story. Well, let's take a step back and sort of share maybe with the audience and get them to know you personally. Share some interesting facts about your past. Firstly, you mentioned you grew up in Perth. I
Yep.
heard.
Yep.
Talk a little bit about your childhood, where you grew up, all that kind of stuff.
Yeah, I mean, so I'm like my parents, both doctors. They wanted their sons to go into medicine. One of us, at least. All of us ended up in IT.
Oh.
So like I joke that we have a full stack family. My younger brother is a front end engineer or full stack engineer. My older brother's like a sysadmin. At one point, that first company I was talking about, I was actually hiring both of them. So I dropped out of university and I was hiring and employing the two who had done their degrees. And my mother was like, "Oh my God, she couldn't handle it." So I ended up hiring one via a firm, so it looked like he worked for someone else, even though I still hired him. And the other one, I got him a job somewhere else, and he's still there actually. But I was in Perth. I had a lot of exposure early on to kind of hospitality and founder-led businesses, like just cafes and stuff, but people in there running the business, high focus on service and professionalism and like really strong kind of service and work ethics. And I think that sets you up in everything that you do, not just in business, but in life generally. And like I had some really hard bosses, but I now look back and go, these people help to make me kind of who I am in terms of my work ethic or my attention and like just drive to get things done or to do things a good way or the right way or a better way. My parents are interesting as well because like they're both doctors. Mum's kind of medicine, but also did another degree somewhere else, and has a massive interest in classical music. I did a bunch of music, which I'll talk about in a sec. But my dad is one of those guys who's like a Renaissance man. Like he played 4 or 5 instruments. He was self-taught on all of them, but was competent, like piano and like guitar and violin, I think from memory, and clarinet. He designed his own printed circuit boards to make his own valve guitar amplifiers. And so he's a doctor, but he said, I want these guitar amplifiers because I want to make my own amps. But to do that, I need to have a printed circuit board. To make a printed circuit board, I need to know how to design them. So I'm going to learn how to design them, then handcraft them. And we grew up in a quite a well-to-do suburb, but we had a metal lathe in our garage. Like none of these things really made sense, but it meant that me and my brothers are quite curious. Like we want to understand how something works. We had these books called How Things Work.
Oh, yes.
You know these books? Yeah. I mean, it's
yeah. Oh, my son's got them. My son's got them. I look through them and read through them all the time with him. And he's a curious boy as well. It's fascinating. It's awesome. Stuff. You can tinker around with so much there. Yeah. And that's the thing. If you have that kind of access to those kind of things, you can do so much.
Exactly. So I think that sort of grounds you in that idea. And then in 95, we had a computer very early on. So we had a computer in the house the year I was born, 78. We all kind of, I don't know how true this is, but my memory of this is we all basically learned to program before we learned to read and write. And both my brothers are engineers effectively. So there was a strong engineering culture. In fact, Mum used to ban computer talk from the dinner table. You can talk about anything, but not computers, because all you 4 talk about are computers. So I think it was inevitable that I was going to end up in tech. And I just got an opportunity in 95 to build a real estate portal in Perth. It didn't exist at the time. It was the first real estate portal. It was about the same time REA got started. And we used to trace the street directory and actually make it so you could search by map. So you could go into a suburb and click on it and say there's 5 properties. And this is like 10 years before Google Maps even existed, And so like those kind of things were what we were doing as 16 and 17-year-olds. And the messaging thing just came from a random conversation. And I think Perth is the way I describe it is it's an awesome place to grow up. It's an awesome place to raise kids. It's an awesome place to grow old. But that bit in the middle, it's kind of, no offense, kind of sleepy.
I know what you mean. Yeah, that's why I think people flock to the other side. They flock to the East Coast instead because there's more opportunities.
And then a lot will go back, because Perth, like to its credit, Perth and the whole Western Australia down south region is an amazing lifestyle. But I found my calling more at the pace and the level that I'm finding probably in Sydney and to a degree in San Francisco. And so the move to me to Sydney was kind of like, made sense. It's kind of natural. But I think a lot of the kind of ethic around how to think about things came from, growing up in Perth and the environment I grew up in.
Yeah, totally. So you went to school, high school, and then university over in Perth as well too?
Well, I dropped out of university and went to Sydney on the back of that dropout. I never went back. Mum's not happy. And she's not happy at all. She still says to some people, when she meets a new person, my dad will be like, don't bring up university. Your mother's still not happy.
Yeah. Well, what did you actually apply for at university?
I was doing, like, I didn't want to do medicine or law I mean, I didn't get into medicine either, to be fair, but I didn't want to do medicine, law, or engineering. And so the only thing left after that is arts or commerce. And I liked business. I had my first business when I was 14. I was selling, almond shortbread to the deli that I also worked at.
Wow.
I've always had businesses, but it's like business.
It's in your blood.
Yeah, it's like, because you can do something. Someone says, I like your cake. Good. I'm going to make 10 of them a week. I'm going to put them in a trolley and I'm going to walk around the suburbs selling them.
Why not?
$50 a weekend as a 12-year-old. Come on. Like, who knows 12-year-olds getting $50 a week?
That's exactly right. That's a curious mind in you. So it pushes you further. That's excellent.
Yeah, exactly.
So coming over to Sydney and so forth, what year was that roughly? Sort of just
2000. I came over briefly 2000 and I moved over in 2001.
Okay. So you've been in Sydney for almost 20 years now. And
well, other than the 5 in San Francisco.
Oh, okay. So 5 in San Francisco. Okay, fantastic. So tell us a little bit about that journey. I know you touched on it a little bit. You're in Sydney. You started the business to actually do the messaging service. How long did that go for?
Well, that sort of, the messaging bit went for a few years. And then it was in 2002 after we had, the tech crash happened in 2001. And so we had money in the bank and we're like, what else do we do? And we started talking to Westpac, who was one of our messaging clients. And they said, hey, we're trying to replace all the paper in the mortgage application process. Maybe you could help us solve that problem. And the other guy I was in business with was a mortgage broker who wrote a lot of business at Westpac, which is why we had that opportunity. And we took a lens of the problem you have, Westpac, is that you're trying to get the broker to do something that serves your interest, but you haven't designed it for their problem, right? The broker's with the customer. They don't want to have to learn a new system. They want to keep a copy of the data. They want to reuse the data. And so we designed a bit of software that did that. And just as a byproduct, happened to send you the data electronically. And by doing that, the brokers were like, we love this. So Westpac ended up mandating it. So it became a better business. And it became, my first business really, or the first digital business was in property anyway. So it's sort of coming full circle back into property and mortgages. And I guess even as a 22, 23-year-old, I was quite comfortable walking into a boardroom with a bank, or a lender who had people there who were 30 or 40 and selling them what we were doing. I wasn't uncomfortable in that situation. And that industry is quite self-contained. Most of the people who were in that industry 20 years ago are still in that industry. Yeah. And so if you're in that industry and active for 5 to 7 years, then you can develop a network and a reputation of, okay, this person is straight up, or they deliver, or their technology's good, or they tend to innovate, they're ahead of the curve, whatever the kind of label is. And so a lot of that kind of 2002 to 2009 was just executing that. But to be fair, I made a crap ton of terrible decisions with regards to how we raised capital, who our shareholders were. I sort of was so focused on the problem and not disrupting our employees that I probably missed the wood for the trees in setting up the company properly, negotiating better for my own, share of the company. And eventually I was like, I just don't want to be here anymore.
So can you just tell us a little bit about that? Did you start that company up yourself, or did you actually have other people did you create a full board and, board of directors and so forth? Like, how did that all come about?
Well, kind of organically. So the messaging company, me and another guy who I was at uni with, and a guy who was my mortgage broker at the time, the three of us started Pisces. That was that first company, messaging. The guy who I was at uni with, who's a great friend of mine, he went back to uni. So he basically stepped out of the company about 2 years later. And then the mortgage broker guy stayed for about another 3 or 4 years. And that's when we transitioned from messaging to mortgages. And then that company had good customers that had good intellectual property and had some pretty reasonable revenue. It wasn't profitable, but it had good revenue and good recurring revenue. And when my investors wanted to get out, we brought new investors in, and then we merged with 2 or 3 other companies that created a company with 4 companies, all of which were sort of doing okay, but not good enough. And a lot of the work that needed to be done to rationalize those companies really didn't happen fast enough. I wasn't the CEO, I wasn't driving the ship. And as a result, this wasn't run as well as it could have been run. We could have, the strategy was, let's have all these companies that are all kind of semi-related, and then we'll, reduce their overheads and operate, make that efficient. And that didn't really happen. And as a result, we had a board, And it came from the 4 companies that we pushed together, and probably had about 80 shareholders. And it was all over the shop. There was some good shit in there, but it was lumped with all these other things that, weren't great or weren't clearly strategically aligned.
Yeah, that's fascinating. It's just so much that happened in such a short period of time. It's hard to sort of, you unpack it and go, wow, I can't believe that all happened. And then eventually,
it's like, the thing is, if you go through that, the learning experience of what not to do in a company in terms of how to set it up, relationships with co-founders, investors, how to run boards, like that stuff, you learn very quickly over 4 or 5 years quickly. What works and what doesn't work, and that helps you the next time you run a business. I mean, the US stuff, I didn't make any of those mistakes. I did make them, but I managed them a hell of a lot better. But learned other things that didn't go right, and I had the same learning inside. It's after 20 years, I've finally managed to get through a huge number of the learnings that you need to properly set up a company and run a company. You can read all the books and listen to all the podcasts you want, but you got to.
But it's a learning experience. You got to live the experiences in order to obtain that knowledge, and that's usually how I think we all learn. It's just the kind of way it is in life. So I'm wondering and just curious about the systems that you implemented. It now has become pretty much standard across the board, but I still, in my own personal experiences, still speaking to brokers, they're still doing a lot of things manual-handed, paper-driven. It drives me insane. Yeah. I'm like, well, look, why is that? That's still that case. It just doesn't make sense.
There's a bunch of things here. I think there's a lot of what a broker does is dictated to them by a lender. Interestingly, the events of this year with regards to COVID have accelerated a lot of the things that lenders have been saying they're going to do for years, because they became no longer just important, but an imperative. And so I think we're finally seeing a turning point on a lot of those things in terms of, if you think about the manual steps that are involved, filling out forms, getting identified, going and getting evaluations, signing documents, those kind of 4 or 5 key moments that are very kind of manual. More and more lenders are moving more and more of those steps to be more and more digitized. And it's kind of happening gradually. But I'm sort of reminded of that, and I'm going to paraphrase it badly, but that Bill Gates thing around things don't seem to change much in the short term, but in the long term, they change a lot. I think we'll be sitting here having this conversation in 5 years, and there will be lenders who you sign in and you connect your bank accounts, and then they issue you with an offer document that you sign on your phone, and then the money's in your account the next day and they've paid out the other lender.
Exactly.
We're 3 to 5 years away from that being a reality for some lenders, and that's enough, because as soon as some do it, the rest have to do it.
Yeah.
So we're
not far away. And that's the thing. I remember maybe 5 years ago now, I can't remember the exact date and stuff like that, but CommBank and all the other banks, when they actually had transactions between each account, I remember it used to take 2 to 3 days to process the thing. Right. And I knew it was a manual process somewhere. That's why it took so long.
They held on to the money.
Yeah, held on to the money. But now, as soon as you go into your app, you transfer the money, it's either in somebody's bank account instantly, like within a few seconds, or, it's just so quick. And I assume it's because of the digitalization and the technology that's been implemented to allow for this, because there's proper security, there's all this integration that works properly now. And just exactly what you said, it will just take.
It's just a lot of it's plumbing. It's just the thing is that, someone's like, just get the thing from there to there. And you're like, yeah, but these are in some cases 20, 30-year-old systems. So PEXA, the system that does e-conveyancing, I think I read somewhere today, does about 70% of conveyancing, which is the act of transferring one to the other. 10 years ago, the system didn't exist, or however long it was, And so this idea of having digital settlements doesn't exist until you have the plumbing to support multi-party digital settlements. It's easy to gloss over and say, just do it. And you're like, okay, well, the number of people who are involved in doing something that cannot be done incorrectly, or people lose their houses, they don't lose their lives, but they lose their houses and maybe potentially their livelihood. Those things are sensitive. There's a lot of reputational risk associated with not doing it correctly. And so there's a lot of people in certain parts of that business who are saying, like, this thing isn't broken as far as we're concerned from a risk lens, so why would we do it? It's not until you get a COVID that there becomes an imperative to do it.
Yeah, and the speed of things just takes so long in the financial sector.
I think as well, though, I think like a lot of what we've been doing at is saying, look, the digitization of the mortgage transactional part, which is this narrow part of the overall period in which you have debt, is going to happen at the pace it's going to happen, as long as is helping to bring it to market and is interacting with the partners and bringing them on that journey. But we can only we can only move it so fast, right? We can't make the horse drink. What we can do is understand what our role is. And a lot of UNO's focus, which is sort of where I've been focused the last 2 years, is what is UNO doing for you that a broker can't do for you? And we've sort of redefined that role as being, look, we can all help you get a good deal at the moment you get a good deal. We have a dedicated broker and we help you to do that in a digital way. You don't have to see us. So if that suits you, then that's why we're better at that moment. But the thing we do that other people don't do is we continuously monitor this thing you have to make sure you're always getting a good deal, not just at the moment where you get a deal. And so much of our innovation and focus has been around owning that space, which has nothing to do with the moment at which you transact. Eventually it leads to that moment, obviously. So I think we're playing in the space that we can control, you know, the pieces of the puzzle rather than going, oh, well, our propositions, hopefully when lenders let us do this thing, you know?
Yeah, you're not relying on third parties like lenders, and you're just, you know, making sure that you're innovating so that way you can stay ahead of the curve.
Yeah,
because eventually they'll have to catch up, you know.
Well,
They
I
don't
mean,
do it, they're going
the problem with being a broker is that your ability to innovate in that area is heavily dependent on them. And once they do it, they'll let everyone do it. So it can never be a competitive advantage anyway. So you sort of have to focus on doing that, but what else are you doing?
True. All right. Well, I'd love to now delve into a little bit about your property investing journey.
Yeah.
We'll probably jump into, you know, I guess what you've done in San Francisco a little bit later on, but wanted to just find out. Let's go back maybe to your first, I guess, property, the one that you first purchased. Most people remember that one. Share with us how that process was, because I'm pretty sure that's probably had a pain problem or point there that, you know, drove you to create what you created.
Yeah. Oh, well, the first one actually went okay. And look, I didn't actually buy the first one. A friend of mine wanted to buy it and he didn't have enough to make that work.
Oh, okay.
And it was about the time, I think like 95, when Telstra floated and a few other kind of companies that were privately, like government owned, went. And I'd sort of traded those companies and it turned $5,000 that I got when I was 18 from my parents into like 20 grand. Like I'd just done a few good trades, a couple of them at IPOs. I'm like, all right, I've got 20 grand. He's like, cool, I need to buy a property and I don't have enough. Can you? I'm like, and I met this guy on a plane on the way to Canada, but we're now really good friends.
Okay. I was going to say.
And I'm the godfather to his kids, right? So we're on that kind of level. And so I was like, oh, that sounds good. And so he bought a property. I put in for effectively a third of it and was responsible for a third of it. And it was a villa in Perth. And we bought it for 243 grand from memory. And then we like put a kitchen in, you know, like it had a shitty kitchen. We knocked a wall out, we put a kitchen in and then put in some flooring. And then he lived in it for a bit and then we rented it for a bit. And I think when we went back into it, maybe I lived in it for a bit. I think I was in Sydney at this point, so I didn't do too much. And then we sold it through a mate, or a friend at the time. And he got an experience where the real estate agent was like, yeah, you should totally take this price. I'm like, we're not taking that price. That's not the price we want. Like we're paying you. And so we're holding out. They can pay more. We don't need to sell. Like we'll sell when we're good. Like I had this negative experience because we asked a friend to sell our house and he didn't really care about the price. He just wanted the transaction done.
Yeah, he wants the commission. That's all that matters.
Well, I mean, it wasn't the kind of property he would tend to sell. He'd be, you know, I'm high flying. I sell these multi-million-dollar houses. Your $350,000 apartments of no interest to me. So anyway, but we made money out of it. You know, like I think 20 turned into 30 or 40 or something. I don't remember the exact numbers.
Yeah, that's great. So you actually had hands-on with that one. You did the renovations and you got involved in to make it, you know, add value to the property, which is exciting.
You know? I was thinking about this 2 days ago. I feel like I wouldn't do that now. Like if someone said reno the kitchen yourself, like fuck that. I will muck that up. I do not need to do that.
Yeah, no, I'm the same. I don't rely on my own skill set. When I was younger, I'd try and I've done that when I was younger. I opted in with a hammer, screwdriver, mold it all in, but no way would I do it now because I can see all the other tradespeople do such a better job than I would. Right. Like I just recently had a renovation done on one of my places. And I said, wow, I could not do what they've done. And I'm being happy to pay them to do it because they did it in so much quicker time than I would have. I would have spent a whole year wasting time putting a kitchen together when I did it in a few days.
Yeah. So like that was an interesting learning. But that property was pretty uneventful and I didn't own a property for ages. And then in 2004, I think it was, I was in Sydney and I don't know why I thought I needed to buy a property at this point. Like I don't remember what drove it. But this second property, I looked online and I found an apartment in the Finger Wharf in Woolloomooloo. Now, if you don't know this building, it's like primo. Like it's this beautiful wool store like building that sticks out into the water. Russell Crowe lives at the end of it. It's full of A-list celebrities.
Yes.
It's got views of the city. It's got all these restaurants along one side. Like if you're going to buy a place and have it as a rental forever, and it'll just just give you investment income, it's like unbelievable. And I found a place in there, one bedder with no parking, for 440. And I didn't have the money to do it, but the guy who was in business with at the time lent me the money for the stamp duty part of it, and then used the grant and the whatever to get around it, because that was my first official property, if you like.
Yeah.
And like I didn't do anything. I put some furnishings in there because I lived in it, and then I found out how much I could rent it for, and I'm like, I do not need to live here, and I moved out straight away. But the thing that I guess I was going to say is that financially, I didn't even run the numbers. Like I was in finance, I was in a business that provided software to mortgage brokers, and I didn't build a spreadsheet or do anything. I ran the shower because I was like, I wanted to see whether the water pressure was any good.
Yeah, I love that story.
Agent was like, what are you doing? I'm like, I don't know. Well, I don't know what I'm supposed to do. What questions am I supposed to ask? It looks nice.
Yeah, I got a tenant in there. It's happy. You still got that property?
Well, no, I had to. When I went to San Francisco, when I left Sydney in 2009, I basically got sick of everything. I got sick of my company, the problem I was solving, the people I was working with, Sydney itself, financial services, tech. I got sick of everything. And when I went to San Francisco, I was going to do industrial design. I ended up going back into tech. I found a co-founder, and I needed to buy him out. And basically, this property was in the black. I had another property that was underwater, which we'll talk about in a sec. And I had to just wipe the slate clean. So I had to sell the property, which I sold for $580 or $585.
That's a good return, yeah.
Well, it's good, but the thing that'll piss you off is if you look at push me off anyway, is if you look at the property market for Sydney, I bought here and it went up, and then it had this little dip, and I had to sell right in that little dip, and then it kept going up afterwards. It was like this 6-month window where the property market, and I didn't have a choice, which really freaking annoyed me.
No one can have the crystal ball for the timing. It's the same. I know exactly how you feel because my parents did the same thing.
The lesson's got to be, don't be a forced seller,
Yeah.
Like if you extend yourself so much in that or something else that means you don't have a choice as to when you sell, then you might get lucky, but you probably won't, and so I think that lesson was a lesson well earned. But the property that I had as well as that property was when I was then earning good money, when it's like 2005. I bought a property in Kirra. I never looked at it. I've never been to that property ever. It was in Kirra, which is next to Coolangatta Airport. And the mechanics were right. It's just in a high growth corridor. It's right near an airport, but it's not under the flight path. It's 150 meters from the beach. So that were the things that drove me to look at it. The thing that wasn't good was that it was a 42 square meter apartment. It was barely bigger than a studio. So the banks didn't like it. So it had no real potential for capital growth unless I bought all 5 of them in the block. And I bought one and a mate bought another. And our plan was to buy the rest of them. But then, the GFC got in the way and our ability to even execute that plan fell apart. That property, I never ran the financials on it. And that property ultimately was costing me about $400 a month to in terms of the debt versus the equity, and I ended up being $40,000 underwater in terms of the purchase price. So I did everything wrong in that property, and the learning from that was like, run the numbers. If you're going to buy a place, and this sounds so obvious, but I hadn't learned that lesson. The first 2 properties I didn't. It's a property,
You buy, but the thing was, you had your mind focused on somewhere else, right? That's the reason why, I guess, you're focused so much on the startup, the businesses, and growing that, and you just thought, okay,
And it wasn't an excuse. I think I could have sat down and said, okay, what is this? I made 2 really bad decisions at that time. I bought that apartment, and I also invested in an agribusiness or tax investment scheme, like an almond farm thing, and both of those things cost me 150, 200 grand, and one of them netted out against itself. The almond farm basically had an asset that fire sailed to cover the loan, and I lost 70 grand or whatever. And then the property overall cost me about $80,000 over about a 7-year period in terms of capital loss and, loss of,
and time and so forth. Yeah.
Oh, forgetting time. Yeah. And so even though I made those decisions too quickly, I was too quick to trust in the advice of others. I didn't question things myself. I didn't build out my own financial models. They were just terrible decisions, and they weren't well thought through. And I don't think I can make an excuse other than don't do it. Like if you don't understand the investment, you shouldn't invest in it. for anything. And like
Yeah.
that's just don't invest. You're better off not investing than making a shit investment.
Yeah, yeah. They're learning lessons in life, and hopefully with those learning lessons, you've
I'm
taken
good
that
now.
forward now.
I'm good now. Yeah. I'll tell you about property number 4 when it makes sense.
Yeah. Well, actually, I guess this would probably lead us onto more of the positive, the spin-off, the aha moment side of things, because you've talked about some of the big learning lessons from those 2 properties. At what stage in your journey did things sort of turn around and go, wow, I've made it with, all the right things that I'm actually doing, or even just an aha moment?
Well, look, I mean, I think like going to the company in the US that predated was called PlanWise, and it was the whole. I've got a T-shirt somewhere. I should have pulled it out, but basically the premise was make better financial decisions. And what we did was we built a bit of technology. It's not actually available anymore. We rolled it into the proposition and company, but the technology said if you're going to make a big financial decision, you need to see how that affects you in the future. Right? Most financial tools in 2010, 2011, and even today are focused on what have you already spent. And I'm like, that's already happened. You can't change that. The big thing is if you go to tomorrow and decide to take a pay cut or have another child or buy a car or buy a property, then what happens to your future financial situation because of one or more decisions? And PlanWise solved that problem. And the property incident and the timber, the almond farm thing led to this idea of most people are very rational at making good decisions when they're well informed. And most of people aren't well informed because they can't do what I would now do, and you probably would as well, which is to build a good Excel model to show you if you buy this $280,000 property and it doesn't go up at this rate, or it's trading on this yield, or like if you don't run the numbers, you can't know how it's going to affect you if things go pear-shaped.
That's
and
right.
So you're not informed, so you're not making a good decision because of a lack of information. And so I've got better at that. I manage my money well day to day, but I also, when I have a big decision to make, I think, okay, how's this going to work? How's this going to affect me financially? Is this an appreciating asset? I've never bought a new car, for example. I use debt, but I use it very judiciously as to what that debt's going to achieve. And I'm very clearly aware of my ability to service that debt. So I'm not in a position where I suddenly have to fire sale assets because I can't, my cash flow is buggered or whatever.
Yeah.
So I think that's the aha moment.
That is amazing. I mean, like to be able to hear something like that and talk about it from that, because a lot of people don't really think it through too much. Yes, run the numbers, look at what worst case and the best case scenarios, but it's very easy to go, if you're starting first time and you look at it and go, wow, this looks like a great investment, I think it's going to do well. That's very much what most people do anyway, unfortunately, especially for a new home or principal place of residence. But when we come down to actually investors, this is where the key point is to actually have tools to be able to access, especially right now in our day and society. Everything's all online, everything's so easily accessible.
Yeah.
How could you not, run the numbers properly? So,
and there's probably some general rules as well. I think if don't put yourself in a position where you have to be a forced seller. Understand that, the interest rate's at 2.69 or whatever they are, variables at the moment. I mean, if that goes back up to 4%, can you afford to pay this thing or not? Like at the moment, I'm going back to 4 days a week. Can I afford to continue paying my mortgage at 4 days a week instead of 5 days a week? That's a reality for a lot of people now. I'm super happy with that outcome, but like not understanding how, if this, then that, how that affects your ability to maintain the investment that you have so that you can choose when you exit that investment, I think is a really, really critical learning. And I think the other thing that people tend to do is they, everyone's optimistic in the future tense, like we get upset by the thing we've done wrong, but then we get, I'm totally never going to do that again. Or I'm totally going to make sure I stop drinking coffee for a year so I can go to Italy, next year or whatever. Right.
Yeah.
And we don't follow through with those things. And so I've seen a lot of people who invest in property and they get ahead of themselves. They're out and they've got 2 and they move them to both to interest only so they can get 4. And now suddenly they've got 4 at interest only. And then lenders turn around because APRA tells them that you need to price interest only more heavily. And suddenly interest only loans all go up 70 basis points. And now they're underwater and they've got to sell 2 of them and not in a good market. Like, why would you do that to yourself? Just get 2 and just keep growing the equity in those. Add value to them. Sell 1, buy a bigger one. You can't manage 4 unless you're a full-time property investor anyway, which I think most people shouldn't be. Could be a controversial opinion.
It's fascinating, and I agree with you as well too, because that's the thing. You've got to be able to make sure 1, you can service, but also 2, you can actually maintain that. Because if you're just dumping in and you go and start buying 4, 5, 10, and so forth, and obviously putting on interest only, and you've got such a huge debt behind you. You got to ask yourself, do you have any buffers in place? And you've got no buffers to be able to put those. You know, if anything happens, then you're in trouble. And I think that's a big learning lesson for a lot of us to apply something like that. You mentioned, it's not so stressful too. So you mentioned the fourth property. Tell us a little bit about that. What happened there? And is this when you came back from San Francisco, or were you actually? Yeah.
So I came back from San Francisco and raised money for Uno, and like Westpac's a major investor in Uno, and it like the thing that I hadn't done in my previous companies was pay myself properly. You know, at that point I'm 38. I've got 20 years experience doing what I do. I'm fairly competent at what I do, and I was sort of. I wanted to have some stability in my own life, and so I basically landed in a position that meant that I was getting a normal salary for a person of my position, seniority, experience, whatever. And weirdly, I decided that I wanted to live in the inner west. Not weirdly, in that I'd always lived kind of in the city or in the inner east. And after San Francisco, I wanted to find a kind of a weirder, quirkier kind of place. And so I sort of was thinking about Rozelle and Lilyfield and places that are kind of these kind of bendy streets and, kind of funny thing going on. And I ended up finding a rental property on Gumtree and a guy was like, that was renting, and I didn't know him, obviously. And it was a place with a lot of light. And my place in San Francisco had a lot of light. I was there with a food photographer. It was this big warehouse with these massive windows. And I wanted to recreate that kind of vibe. And he had this place that was like a 2-bedroom apartment on top of a building.
Oh.
And I was like, that sounds freaking awesome, like baller. And so I was like, hey, how you going? And I turned up with a couple of ciders. I'm like, I really want to get this place. And he's like, yeah, okay, sounds good. And so we ended up living together. And about 3 months after I moved in there, I'm walking home one day and I see there's a real estate agent on the corner and I see our house listed for sale. I'm like, oh, our place is for sale. And I went back. I'm like, hey, our place is for sale. He's like, yeah, we've got the lease. We're cool. Like, no, we should buy it. Like this place is cool, And I had no idea what it was going to look like. And like at that point, I was obviously working in mortgages. I understood the mortgage process really well. And this place, if you want to run the number on it, like it's a block. It's the standard like Parramatta Road thing. There's one commercial residence downstairs. There's 3 floors of residential apartments, and then it's the whole top floor of the building.
Oh wow! You had the whole floor. It's almost like a little penthouse kind of thing.
If you're ever going to use the word penthouse, this would be it.
Yes.
And so the property itself is titled such that it can only be one residence, but you can it's kind of like a house on top of a building, right? And so that was attractive. This idea that you had a place that was 2 to 3 kilometers from the city, that it was right near a major university and major medical facilities. So if there's it's going to be a good rental. There's a long-term plan to green that corridor from Parramatta City to Parramatta Road along Parramatta Road. So there's infrastructure development. It's next door to a school that's never being built out and knocked down. It's been there for 150 years, heritage listed. It backs onto a park. It's 15 minutes from Newtown. It's 15 minutes from Annandale.
Oh, it's got a whole bunch of
good stuff, right? And I live there, so I'm like, this place is cool. What was challenging about it is that the title is a weird title that the banks don't really like. It's a thing called a Stratum Title. Which is effectively means it's a self-contained lot, and it's part of the strata, so it's part of the building, but it's also, I get a water bill. Like most people in a strata don't get a separate water bill. They get, they basically have water usage. And so it's kind of weird in that way. And that the challenge was, and the reason why it had been on the market for over a year was because I don't think anyone could negotiate or navigate the problem with the bank. Because if you went to the bank and said, I want to buy it, they'd go, we don't really like that title. Being a mortgage broker, I was like, I think I can navigate this. And it took me 3 months to navigate it. And I didn't have any money. I had to borrow the deposit from my friends and then pay them all back. So that was lucky. But I've now ended up with this 2-bedroom apartment on top of a building that I can probably do some stuff to add more value to. It's got district views. It used to have city views, but they just built a place next door. And living the dream. And like, like the yield on it, like I don't rent it at the moment, but I think it would probably rent for about 4.2, and like the purchase price of about 1.3. So like it would, like in a normal market, it would probably be on a 4% gross yield.
Yep, that's excellent. So I mean, like it's awesome, because the fact is that you're able to negotiate a price on something like this, because it was not something that I guess the bank would want to do. But I mean, the interesting thing about it is that what did you do that the other buyers couldn't do to convince the bank besides, as you said, your mortgage broker, but what was that one key component that you managed to get them to go, okay, yep, I'll lend you the money?
There's two challenges. Like, I think it'd be specific to anyone who's doing it. So it wouldn't, like, what I do might not work in another situation. But there was two challenges. Is that, so this particular title, the banks are like, it can be problematic. And so I had to step through the things to understand what those problems might be. And I actually had to engage a lawyer to do that. I had to get a property lawyer to go through and say, these risks that can happen with this title, and they happen with Stratum Title or Company Title or Purple Title, they're not as watertight as kind of Strata Title, which is very clear that you have this thing and have all these rights within this kind of floor space or whatever. And so I had to navigate the Strata Corporation documents to go, are these actual risks for this particular property? And the way that the Strata was set up is that for those things, those risks to eventuate, like, hey, you've got the access to the lift lobby on level 4, and it comes in and it's your exclusive use, but the body corporate could take that away from you. The Strata corporate could take it away. It can do that, but only if I agree. So the only way those things become real is if I go in and go, yes, I'm voting against my own self-interest. And so when I was able to like navigate the detail and work through that detail with the bank, they're like, all right, I get it. It's weird and it's unusual. We don't normally see these, but in this instance, we can help. You can explain that the risks we would typically associate with these types of properties. The second risk, which is still an ongoing one, not even risk, challenge, is the valuers battle massively with this title. And even like if I want to do something now, I think the place is worth infinitely more than what I bought it for, because it's like if someone said that you can own a 400 square meter, rooftop, unobstructed. Like in Sydney, I've got 2 kilometers from the city. Like the idea that in Sydney that's worth 1.3 doesn't matter. Like any property person who walks in,
any person.
Shit, dude, what do you got going on here? I'm like, I know it's epic, right?
I mean, when you think about it, 400 square meters, 450 square meters is what you buy out at Schofields and out this towards the the hills area, and they're paying easily over $2 million just for something like that.
It's a house in the sky, right?
Exactly.
And so I think the valuers are like, cool, we get that, but it's this title, and we know that the banks have a problem with this title, and so I haven't won that battle, and I don't know how I'm going to resolve that. I think eventually I may need to change the way the title works. I just don't want to give up the right to be able to develop the property up here, because that will add more value than the title. So I don't know what the solution is. The valuers, when you buy it, they ask a valuer to come in, and the valuer says, well, you paid 1.3 for it, so it must be worth 1.3. But that's challenging. I don't know how you get around that, to be honest. But it's pretty unusual.
Yeah, so that's something, I guess it's ongoing, as you said, but that wasn't a roadblock for you to actually get the mortgage from the bank, and they basically approved it so you could purchase the property. It's just like, if down the track you want to develop it, renovate it, or do whatever you want to it, that would be another thing you'd have to come across as a hurdle. Which
And my sort of thesis with property investing is, and this might be counter to some of the prevailing wisdom, which is get one property that you live in and continue to invest in that, as in make that better. That's a very tax effective way to grow wealth through property, is to buy and invest in your own home and then sell it and move every 3 or 4 years. And, you can upgrade and do well, and you pay no capital gains tax, and then maybe have one investment property, one that you've got that it just pays itself over. And eventually there's a 2-bedroom house or a 1-bedroom apartment, whatever your level of comfort is, a thing that and you can, between those two things, most people can generate more than enough wealth over their lifetime to then be comfortable in their retirement without anywhere near the level of headache that you have if you go out and have 7 apartments and blah, blah, blah. So my thesis is always, invest in your own home and live in it and make it something that you would love, and do that over a period of time. And then when it makes sense, sell it and buy something bigger if you can, or less if you don't need it. And then one investment property.
Yeah, I'll have to admit and say that is true for the fact that I grew up with a father who did that. So the reason why I knew was because I helped him, add value to his house, and we made it bigger every time.
Yeah,
and I grew up in a nice place, and likewise, equity and so forth grew dramatically over the period of time that we lived there. So it is true, and definitely possible, across anywhere actually, whether it be Sydney, Melbourne, or Queensland, anywhere that you go. So it's phenomenal. I wanted to also delve into the next part, is probably about loans. Now, I know your philosophy is to help solve problems. And that's fantastic philosophy, because you're not doing it, really just for the money, but it's mainly just to be able to help come up with a solution for a big problem. And my problem and gut hate at the moment, and I've been going through this process quite often, is the amount of paperwork, the amount of time it takes to actually get a loan. You go to so many different mortgage brokers, they've asked you so many different questions, but essentially it's going back to the same kind of thing to get an answer, which is, can I get a loan to be approved?
Right.
How does Uno Loans, come about that? Actually, maybe let's take a step back, because you're talking about PlanWise, which was the initial software. How did that evolve and turn into what it is now from when you came back from San Francisco to solve that problem?
Sure. So PlanWise was pretty singularly focused on this idea that at the moment you make a big decision, if you don't know how that decision will affect you in the future, then you're probably not making a good decision. You might get lucky, but you probably will be unlucky. And so what we built was actually a set of tools and engines, if you like, that enabled us to produce that outcome. When we brought it back to the ethos came with, which is, we've got to help people do this better. Everyone in the industry is focused on the mortgage product. What you need to be focused on is the property transaction. I can get you a super cheap rate. If you buy the wrong property, that doesn't count for shit, right?
Yeah, that's
so
right.
I think, so what came back was a set of core IP that allowed us to build financial models, for want of a better word, and an ethos that said, let's help people do better at this whole 40 years of owning property and debt and generating wealth through that kind of maxim. And look, the part of the process that you're talking about, which is how do we do things differently in that moment when you're transacting, there's sort of 3 parts to the customer journey, and we do them really well or as good as the rest in varying degrees. So like the bit where you don't want to talk to someone yet and you just want to go in and do your own research and read some content or sign up to a tool like Loan Score, which monitors your current loan, all that stuff we're doing really, really well. And we believe that it should be widely available. We believe that essentially you should have the same access to the kind of tool that a broker has, so you can learn for yourself and get access to the level of insight that you might have. And it makes it super transparent. It makes it more competitive from a lender perspective. So that's sort of self-serve research piece. That's the first part of it. The second part, which is where you say, I've done all that research and now I need to do something, or now I want to do something. I'm not really sure what to do. So I need to give you enough information so you can help me. And that part of the process we've now digitized. You can use a device like this and you can give us information over about a 5 to 8 minute period. And that will be the vast majority of the info we need to let you know how we can help you and what you could do or what you should do. And that takes away a lot of the initial kind of, all right, just fill out this fact find for me, or, I'm going to need to see a couple of payslips. We ultimately need all that stuff, but to get you to a point where we're like, hey, you got some options here and here's what those options look like. If you go through that process on your phone in about 5 to 7 minutes, we can have a very rich and meaningful conversation with you as a broker. And it's only to get you to a point of this is what you should do that we need a few more documents. We're going to need to see a couple of payslips, a bit of your bank statements to understand what your actual spend history is, the stuff that legally we're required to do. And again, making that easy. Okay, well, if you want to give us bank statements, well, great, go over to this link and connect your bank accounts, and that's how we get them. If you want to upload documents, well, it's mobile optimized. We'll send you a link, open it on your phone, take photos and send the documents to us so you don't have to find a printer and a scanner and these kind of things. So in that stage 2, it's making it far more optimal to get to the point where we're like, this is what we're doing. The third part is the bit where we actually put it with a bank. Now, we do a bunch of the heavy lifting in the background like brokers do generally. And so realistically, a lot of what we can do is driven by what the lenders enable us to do digitally. And I think a lot of what our role is isn't just to do that, but to say, hey, there's 3 lenders here. One of them requires you to go to Australia Post. The other one uses Zip ID, who'll come to your home to ID you. Is that important to you? Because if it is, we'll go with the lender who's going to be far more digital. If you don't care and this one's slightly cheaper, then maybe you'll happily go to Australia Post. And so whilst we can't tell all lenders to use Zip ID or some other online identification, we can at least let customers understand these are the good ones from a digital perspective and these ones less so. If that's a factor, then let us know because we'll steer you in the right way.
Yeah, what's interesting is there really much of a saving between the difference? If, say, for example, you get, what you're saying, go to Australia Post and get that ID compared to like Zip ID. I mean, those are just the sort of minor things, just to get verification, but does it really have an impact on how much Yeah.
Yeah,
So
no, I
what
mean,
I'm,
it'd be like it's not like the lender who's all manual is like so much cheaper that you're like, I don't care, I'm going to go to Australia Post. It might be like 10 or 20 bucks a month kind of thing for someone with an
yeah.
average loan. And you might go, oh, well, that adds up. I'm like, yeah, but you don't even know how it's going to play out. The lender that's cheaper at the moment might be more expensive 6 months from now. You know, if you don't do it, it's going to be the biggest impact. Either of these options is going to save you money. So you should definitely do it. This one will require you to get in your car 3 times and find justice of the peace, right? This one doesn't need that. So, you know, like, and what we ultimately want to do, obviously, is have the lenders who are better at being digital get more of the business, because customers want that. That's part of the proposition. It's not all about rate. It's about, service proposition and speed to decision. And typically the digital guys turn stuff around faster because they've got less manual across their whole business, not just your interaction with it.
Yeah, that's what I was going to ask next, because it should speed up the process. Because at the end of the day, that's what I've been as a I guess an investor and also a person who's been looking for finance has been frustrated because it's taken so long to be able to do that. You know,
Yeah.
we don't want to actually get to that point because you lose deals. You know, if the deal's on the market and you've got to go to auction the next day or whatever it is,
Totally.
you can't afford to wait, 4 weeks down the track to get approval.
And look, I think there's definitely an acknowledgement that some deals are necessarily difficult, because it like everything's okay except for this one thing. You know, a deal that I'm across at the moment, the person has been in the same industry for 10 years, but they took a couple of years out to have a kid, perfectly normal, went back to work and got a contract 6 months ago and are now getting a new contract. All right. And then so in the process of they're about to go and land a new contract. And so the lender rightly so is saying, well, I trust that you can get employment, but as it stands today, you've got a few weeks left on your current contract and you haven't got a confirmation of your new contract. So it's hard for me to approve until you can prove to me that you're going to have a contract in 2 weeks' time. And I think lending there's always a gotcha, and a lot of what has to happen is in those interactions. It's hard I don't think it's impossible, but it is hard for an algorithm to be able to understand the LVR's okay, the credit history's okay, the servicing's fine, but they've only been in their job for 6 months and they're about to renew their contract in this instance. So someone has to take that into account and go, all right, that's okay or not okay. So I get that there is manual involved. A lot of the time I think ultimately you could build an algorithm that would say, well, you approved this last time and this is 99% the same. Why wouldn't you do it this time, kind of thing? But the lenders aren't there yet.
Yeah, it's going to take a few years.
Yeah.
Do you think there'll be a point where, I guess, mortgage brokers, and this might be a controversial question to ask, is that mortgage brokers might not be needed in the future because, I guess, technology like this and services like yourselves can actually do most of the bulk of the work? Because if people came through and just went, like the big players, when we think about it, I'm just looking back at the telecom industry. We had mostly Vodafone, Optus, and Telstra being the big telecom players. And most people usually went to there until, sort of the competition sort of increased, sort of brought prices down. But if it became to the point where there'd be only certain big banks, which we've got the big four and then smaller ones and so forth, that they would actually be just using electronic services like this.
Yep.
What happens to mortgage brokers?
I think I'll probably, I'm going to answer your question in a kind of a roundabout way. Right now, there is robots that can do surgery better than humans. In every count. The surgery is better. They can do it for 12 hours a day without getting tired, 24 hours a day without getting tired. But would you trust that robot to be doing it without a human in the room at the moment? Right. Now,
no.
Now, when mortgages aren't rocket surgery, but there is certainly an argument that the decision is big enough that a human wants a validation and comfort from another human being. And we think that a lot of what the role of a broker will ultimately be is someone who is dealing with this all the time to help you understand that the decision you're making is a good one and to synthesize something a computer can work out and generate in a fraction of a second into human terms. And I'll give you a good example, a guy who's a customer of ours, and I'm not a broker per se, in terms of I don't actually do the broking, but he's kind of my customer. Like he comes to me if he's like, hey, where do you think interest rates are going? And he's having a human conversation with me. He wants to understand whether he should sell a house because he might come back. He's coming back in a few years, doesn't think he'll be in that house. And he's trying to, there's a personal narrative here that's happening. And the conversation with another human is around that personal narrative. And the framing is, what mortgage decision should I make, right? And what I think will happen is that you will see a lot less mortgage brokers because the technology will take away a lot of the things that they need to do. But you will, other than for straight refinances, which is just as long as this gives me the same as what I have now and it's cheaper, yes, just automatically refinance me. Yes, that'll happen. But as soon as there's a transaction, as in I'm thinking about using my equity to buy another place, you know, or we want to renovate, you know, we're thinking of downsizing, whatever. As soon as there's a transaction typically associated with a kind of a human transaction, as in something that happened in your life, like having kids, getting married, you know, losing your job, whatever the thing is, I think the human element will play a critical role in that part of the equation. There just won't be as many of those humans doing it.
Yeah, that's totally true. And I think that's going to be the case. It's like, this is probably not a good example, but like, I guess eventually digitalization replaces like paper, for example, which is what's happened over a period of time. But we still have the newspapers and the books because there are still going to be that, that interaction that we still want, that physical feeling and touch. And it's the same thing with humans.
Same kind of thing.
Yeah, and I think at the end of the day, what the computer will do is probably be a faster way to give you a yes or no, and that yes or no translates back to us going, okay, by the way, you know, if it's a no transaction, then you can kind of just sort of make that impact less, you know.
Yeah.
Rather than computer saying no.
Well, look, I mean, I think
pretty harsh.
when the decision is entirely rational, like, hey, you have a product, this product costs you 1,000, this one costs you 900, they're equivalent products. Would you like to not spend 1,000 and spend 900 instead? And that's it. Then you don't need a human. Of course you don't need a human, right?
Yeah.
But at the point where you're like, hey, I'm thinking of doing X and X will require me to change my mortgage situation, the conversation is not really about the mortgage. It's about, should we sell our home? You know, I think the mortgage brokers that'll do best are that, like in all industries, this isn't just mortgage broking, will be the people who have curiosity, innovation, like can do things creatively, like think creatively, and empathy. And if you have good empathy and EQ, then people will want to make big decisions with your advice. And that's the best thing anyone in a service industry, financial services or otherwise, and broking included, will likely find themselves in the next, 5 to 10 years.
Totally. All right. Well, I'd love to now jump on to sort of the mindset side of things. I guess this is a big question for you now. I mean, so much has happened over your journey and so, but what's your biggest why behind why Uno Loans and what you currently do?
Yeah, look, I mean, I think we're still landing this for ourselves. I think when I first pitched to West back in 2015, I basically said you should be able to go through the entire mortgage process with any bank on this device. That was kind of my pitch to them, which is quite rational and functional. And, a lot of people are like, yeah, that's what I want. I want it to be so simple I can do that. But in terms of the why, I think a lot of our thinking we're just getting through at the moment with this is that we're elevating our kind of vision for is that we want to have the happiest home loan customers in the world. Now that might sound like whatever or, counterintuitive, but like happiness takes a lot of forms, right? There's a happiness that is like, hey, happy, right? That kind of happy. But there's happiness that's just kind of content, or, that is kind of, it's being taken care of. You sleep easy at night. This level of happiness where it's just not a thing you have to worry about, is a lot of that thinking, which is, if we can aspire to that, then people will be like, you know what, I don't have to invest any of my headspace in worrying about whether this thing's any good at any level, whether the product's good, whether I bought the right place, what happens if I lose my job, whatever the thing is that takes you away from actually living your life is kind of the motivational space that we're playing in. 5 million people in Australia who all have homes and have mortgages attached to them. So there's a lot of people in Australia that this impacts. And the mortgage tends to be the biggest single line item in your expenses on a monthly basis. In fact, we did a report, which we can leave a link or whatever for people, called a household wastage report. We've reframed interest as a form of waste. And we found out after food, mortgages are the biggest form of waste where you're overpaying on your mortgage, no different to throwing out food or getting parking tickets, right? And so you've got a problem that's highly emotive for a large number of Australians. And I think that the systemic thing that we have to think about is households that go into financial stress, whether they're not making a lot of money or making lots of money, either or, are not good for the house. They're not good for the people living in, ultimately not good for community. And so if you can actually make people's households stronger by, through our goal of having the happiest home loan customers in the world, then this is good for people and it's good for communities,
Absolutely.
So that's a big part of the motivation.
That's excellent. Yeah, that is the motivation. And I see that it's going to continue to grow and impact so many more Australians around, because he's done such a great job at this point in time, to influence so many. Because I have heard immuno loans everywhere. As soon as I first saw it out there, I'm like, wow, what's this immuno loans?
Well, we're still early in our journey. I think we've got a long way to go, which is good, right? The work's never done. But I think it's good having a true north. We're playing to our strengths now. We've basically got, some of the best technology in the market, and we're using it to make people's lives easier and better. And it's a really big financial problem for people on a day-to-day basis. And that can be less of a problem for people, and people can, like most people ultimately are elevating to some form of financial freedom, and some form of financial security, as in the freedom to do what they want and security to provide for themselves and their immediate family. And a household, a mortgage and the property associated with it can be a massive part of doing that. And so if we can play our role well, then we can, contribute very positively to that higher order need that people have. And that's a good thing to be getting up every day and doing.
Absolutely good thing. So you talked about initially when you're at university at first.
Yeah.
That was a long time ago. Yes.
Yeah, it's back to that arc. I love that.
Back to there. And you had someone who actually gave you, support and I guess mentorship to say, look, you should go out and do this. Along your journey of creating and founding these companies, have you had specific mentors that you could attribute your success to, and also any particular, resources that you could share with the audience?
That's a good question, because I think I've never had formal mentors, and I think that might be a failing on my part, to be honest. I think there is a lot of value in identifying someone and formalizing a relationship with them. May not be paid, but something that says we're going to meet every month. And so many people I know who I admire and are successful in whatever measure have that situation. I think what I've had in turn have been really important people at particular moments. So as a really good example, there's a lady, Tristan Langley is her name, and she worked at a company that was potentially going to invest in Pisces, the mortgage software business that had some great IP and some great customers, but ultimately with all over the shop as a business. And she didn't go on to invest. And then I left that business and decided I was going to move to Silicon Valley. And she split her time between Sydney and Silicon Valley. A venture firm she worked for made investments here and there. And when I got there, she's like, Vince, look, honestly, you got to go back into tech. You're good at tech. You were solving the wrong problem with the wrong people in the wrong city. Just rethink that stuff and be a little more, intentional about what you're doing. And I was going there to do industrial design. I ended up going and starting Planwise. And so I think that moment was a really kind of critical kind of moment for sure. And I've had maybe half a dozen of those conversations. And I think the advice, I guess, is not necessarily go and get a mentor, but be open to those moments. This idea that you have someone, and we're still great friends. I don't speak to her as often as I should, but that she was there in that particular moment for that particular reason. So I think that's certainly a thing. In terms of resources, though, one of the a big part of my go-to, as odd as this sounds, is just TED Talks. Every time I've had a really low moment where I've doubted myself, you think you're having a bad day, go and listen to some of the people who are giving TED Talks and work out and hear where they're coming from.
Yeah, they're great stories.
They're great. And there's some of these people I grew up in the war-torn parts of Somalia and I was carrying a gun for the first 7 years, and people are fucking amazing. My life is irrelevant compared to what these people are doing. I find that super motivating and informative.
Oh yeah, it puts a perspective on life, and you're going, we're just dealing with first world problems.
Yeah, and you learn from these people too, right? Resilience is super, super critical. Awareness is super critical. I read 40, 50 books a year. I'm literally reading a book a week kind of thing. Half of them are fiction. They're just to get me to bed. The other half are things from, really interesting reads. There's a book at the moment I'd recommend to people, 21 Lessons for the 21st Century. Great book. I forget how to pronounce the author's name, but
sure.
There's those things I think are really good. I also listen to a lot of kind of guided meditation. I don't do meditation by myself, but guided meditation I think is a really useful thing for reflection. Most of the high energy CEOs, founders, or whatever I know are doing some form of meditation.
Yeah, that's fantastic. Tell us a little bit more about this guided meditation that you're talking about, because I know some people may have heard of it. Some people may just like go, okay, well, I know meditation, but what is this guided
Yeah.
meditation,
Look,
and how do you do it?
how do you... It's going to be like a 20-second crash course. Look, I mean, I use it very specifically at night. The part of the problem with an active mind is switching off. And if you don't switch off, you don't sleep. If you don't sleep, your ability to do anything becomes terrible, and you become terrible to be around. And that often leads to other challenges that become endemic and problematic. So being good at sleep is a learned skill, in my opinion. And you can set up the conditions pretty nicely. Don't watch TV at 8 o'clock at night if you want to go to bed at 9 o'clock. Dimming on all your devices, turn off all your notifications, don't have any devices in your bedroom. Like, there's a whole bunch of things that you can do to create good context for sleep. But one thing you do need to do is you need to take your gamma, alpha and theta or whatever levels down. You basically need to be not thinking. You need to be clearing your head. You need to be doing what a Buddhist is doing. And if you go and learn meditation, you can absolutely get to that state with nothing, right? You can just go there and commit to stopping thinking. The thing I find that's interesting with guided meditation is that it gives you something to think about and nothing else. And that has a similar effect for me, at least. And so there's a particular one that I would call out. It's on YouTube and it's free. As a result, it's called a guy called Jason Stevenson, who I think is actually Australian. And he does these kind of 1 hour to 3 hour guided sleep meditations. And there's a whole range of them for wherever your head's at, kind of thing. And I use those 3 or 4 nights a week, I would say. And I use them in moments where I can't sleep, if I wake up and I need to get back to sleep. And I find that as a really solid base for that. And I've gone and listened to other ones as well. I've tried to do just meditation without that. I'm just not as good at it. And maybe I'd get better if I tried harder, but I'm happy with Jason.
That's awesome. I really, really appreciate that recommendation, because I struggle as well with trying meditation. I did try it for a little bit, and mind wanders, and you just start thinking about all other sorts of things that you need to get done. It just gets busy.
There's other forms of, I didn't think to buy it, but we now have a treadmill in the house, and like running, and I'll probably actually go and do that after this. Running is a great form of meditation. But it's not a great thing to do before bedtime because it charges you up.
You'll be running on bed.
Yeah, exactly.
So tell me, Vince, if you say you met yourself 10 years ago, what do you think you would have said to him?
From a commercial perspective, like with regards to business and property and the stuff that is in that context, I think the thing that I would love to have been doing better 10 years ago, and therefore would say this, is to get better at understanding people. I think I've always been reasonably good at selling, is it not like just like getting people to come and join, like people like, oh, I want to go and work with that guy or invest in that guy or whatever. But I think the act of getting people to actually be productive in and of their own right, and people management, hiring well, firing well, like I had to break up with a few co-founders, right? And that set of skills is infinitely, massively important, whether you're a founder or not. And I think the 10-year ago version of myself wasn't very good at people, wasn't good at people management. My attitude was, well, if you want to work for me, come and work for me. And if you do want to work for me, that's my only bar as to whether you should come and work for me. Is if you want to be here, then I want you to be here. And I think that that was a mistake, and I think I've cost myself a lot of progress by not being good at creating high performing teams and high functioning teams. And the team at the moment is high performing, high functioning, and it works well as a team. And Google did a bunch of studies on this, right, where they realized that teams where people can be vulnerable and have provided divergent views and navigate those views and land at a resolution that people have agreed to, not by force but by coming along for the journey, kind of thing, is really, really valuable. And so that's what I'd tell myself.
Yeah, that's awesome. I love that, because collaboration is so important, especially in a team, because everyone comes from different diverse backgrounds, different views and so forth, and having that big, I guess, perception of changing and agreeing to come to the same view and to come to the same resolution is so powerful, especially when it's done well, collaborative, rather than just, from the head up, saying you've got to do it this way.
Someone cracking a whip. What I would tell my personal self outside of work was keep doing random things.
Okay.
So much of the stuff that brings me joy or has opened a door or created even a business opportunity has been because I've done something random. I've got on a plane for no real reason. Like I have a son now, and the only reason I have a son is because I got on a plane because someone I met at a wedding in Greece said, lived in a city, and I went, oh, that sounds like a cool city. I should come visit. And I went there and met someone, and then we have a child. Like go and do random stuff, and don't like, oh, well, why am I doing this? Who cares? Just do it anyway. Like that's where the spice of life comes from. So I tell myself
absolutely.
to make sure you do all those random things you do.
That's so cool. Awesome. And I guess looking forward to the future for, say, loans, what do you see, I guess, your plans or what are you looking forward to for the next, say, 5 years for that?
Yeah. Wow. Okay. 5 years. I thought you were going to say like 3 months. I'm like, all right.
All right,
years.
3 months. Then.
No, I can give you 5 years. Look, I mean, we're onto something with, customers are telling us that they really like what we're doing. The teams really sort of, every month we get better and better at delivering that thing. And I think for the next 3 to 6, maybe even 12 months, we will be hyper focused on the delivery of this idea that we should have the happiest home loan customers in the world. And that, as externally that might sound trite, but internally people are like, what do we need to do for that to be reality? So our customers absolutely rave about us. And that's the thing we have to do. That's the only thing we have to do, because that is the key to success in a lot of these, in any business really, is that people will tell other people about it. And that's how you scale these things long term. And the motivation to come in and do that is super high. So I think within, in the near term, no movement away from that. I think in practical terms, it means we're not probably going to do all some big bang stuff like we've done the last couple of years. We've done that. What we're going to do is invest in all the little things that make it not as good as it could be, and just make that better and better and better every week. Ship new stuff, or change the way we ask questions, or change what we ask so that we don't have to ask as many questions, whatever that thing is, so that over time people are like, wow, I don't know what it is, but this thing's just better. It makes me happier. It makes me sleep better at night, or whatever the measure is. First thing we have to do is come up for a measure of happiest home loan customers, which we haven't done yet, by the way. And so I think that, and then in the long term, I think we're setting ourselves up for the technology being far more broadly applied further down the funnel. So further down the process of a mortgage. So digitizing through to the point of decision and even settlement. That's clearly part of our value proposition, is that we want you to be able to be on the best loan all the time. And that's part of what makes you happy. Not all of it, but it's part of it. And so how the investments that we make in technology to make sure that the lenders who want to provide that kind of outcome are lenders who are working with is another big part of what we have to do. In fact, a lot of my focus in the next few years is on bringing more lenders into the fold, so that we have lenders on our panel who do things that you just can't get elsewhere. And that will that will help reaffirm that if you come to us, you're going to get an amazing outcome and an amazing experience.
Yeah, and that's what will make your company very, very unique, and also stand out from the rest of the crowd. So that's amazing to hear.
Yeah.
And you've achieved so much in that period of time. You've had a very successful founding history of tech startups and so forth.
Yep.
How much of your success is due to skill, intelligence, and hard work, and how much of it do you think is because of luck?
That's a good question. Look, I don't know about skill and intelligence. I think the intelligence takes a lot of forms. So I'm intelligent in some areas that are incredibly useful in what I do. I think, I can't remember the exact word, but Steve Jobs talks about this idea that a founder has to basically bend reality. They have to get people to believe stuff that's not real. Oh, I want all my songs to fit in this tiny little device. Like people have to go, well, how are we going to do that, right? And he has to convince people that that's possible. And then, so I think that's a skill / intelligence that I have that's critical to what I do. And that has been critical. I've had, the first investor in PlanWise was a guy I met at a festival, like to be able to convince someone who you met at a festival and spend a bit of time talking to, what, I need 14 grand. I don't have it because I'm completely out of money. And if I don't know how to get it, I can't get on stage in New York in 7 weeks. I think that's a critical skill, and it attracts talent, it attracts capital, it attracts partners. And so I think that part of it I would put down to a skill or an intelligence. I think a big part of the other thing that you have, and anyone can choose to have this in them, is the perseverance. I think it was Eleanor Roosevelt who was like, nothing in the world will replace perseverance. If you just keep at it, then eventually you will get lucky, right? And that luck part can play out in the first day or at day 10,000. You just don't know. But if you do keep at it, eventually what's going to happen is you're going to get a break, right? And that break, in my context, one of the breaks, was that when I came back to Australia, I had intended to launch an online mortgage broking business, which has now evolved into, as an active home loan manager. And Westpac at that time was interested in backing an entrepreneur who wanted to do that. That was lucky. Yes, it was. Did it take me 15 years of building mortgage software, going to the Valley, learning everything I know, raising capital? Westpac was already a customer for 5 bits of software I built in previous companies. Yeah, those things had all happened. The lucky moment was when all those universes collided to, hey, at this moment, we need this person to do this job and we're going to write a check to do that. So luck plays that role, but the other ones sort of give you the opportunity to be lucky, I think.
Yeah, it's rocking up and being prepared for those opportunities. That's what is your luck.
Yeah, exactly. But I think the perseverance thing is probably, you can only be as you can always improve your skills. Most people have a certain knack for a certain thing, whatever that thing is, and so you have to play to those strengths and understand what the ones that you aren't good at, like people and things like that I need to get better at. But the lucky part comes typically through perseverance.
Awesome. Well, Vince, it's been a real pleasure to share your story on the Property Investory podcast, and also to just amazing moments that we've just shared here as well too.
Right.
If listeners want to get in contact with you, find out more about Earn Own Loans, what's the best way they can reach out to you?
I'm on Twitter. It's probably my easiest way to get me. If you're not on Twitter, then it's fun. I'd try Twitter. You should be able to just find me under Vincent Turner. In fact, if you Google Vincent Turner, I think you find me, or Vincent Turner, you'll find me. So you can do that. I host a podcast called shapethesystem.org. So if your podcast is your thing, you can reach me via that as well. And yeah, I love it. Like if there's founders and entrepreneurs who are like, hey, I'm thinking about X or Y, I'm generally up for a chat. I have enough time in my diary every week for people I've never heard of who want to talk something startup entrepreneur related. Probably not as good at answering mortgage questions, but I do have them, or I can direct you to the team for sure. And if you just want to banter about property, I'm always happy to do that too.
Awesome. Well, thank you so much again, Vincent. It's been a pleasure to have you on the podcast. And
thank you.
Yeah, looking forward to future success as well too for Earn Own Loans.
Thank you so much.